Hello, traders. This is Balone Sachs. This is going to be sort of a part three or a part two to my part two video where I talk about how to use these overlays that I wrote. But before I get into that, actually co-wrote, adapted. Before I get into that, I just want to mention a few things like I did in my previous videos. I'm not a professional trader. I'm not a financial advisor. This is not financial advice. This is not an endorsement of any particular product or any particular stock. I'm not telling you to buy or to sell anything. Whatever you do trading is your decision, and you make that decision based on your own process. I'm doing this because when I wanted to learn the strat, I'm a visual learner and I have a little bit of a programming background, and so in order to learn, I started writing these studies and I started sharing them, and folks started asking me questions about them, and that turned into questions about the strat, and so I started making these videos. So that's why you're here, and now that we've gotten that out of the way, if you don't know, this is where you can find my all of the studies that you see me use. It's usethinkscript.com. You can just go here to search and type in Rob Smith, and it'll bring you to this thing. And they're all here. This is the strat bar numbers. They look like this. If you've seen it, I'm not going to spend too much more time going over this, but just so you know where to find everything. So the first thing I want to talk about is these overlays, which I didn't get much of a chance to talk about in the previous video. We're going to go ahead and do that now. So first of all, let's look at the intraday. And then these aren't my studies, actually. Well, the overlays are my studies, but what I'm going to talk about right now is actually something you can find on Thinkorswim. Is these horizontal lines that you see right here. There's a green one here and a red one and a black one. And I made them these colors because the background here is white. These are really neat. And I just started using these recently. What these are these right here. This is part of Thinkorswim. You already have this if you use Thinkorswim. It's the daily open, and it's set to day for the aggregation period, and I made the color a very dark blue because of, again, the white background. So this is going to print that horizontal line that you see right here. This is going to print that line, and every day when it opens, you're going to know exactly where it opens so that you can know if price is above or below the open or consolidating around it like it is here. The other ones, this green one and this red one, are also part of Thinkorswim, and it's called Daily High Low. And again, it's set to day. Just leave everything else the same. I made mine dark green for the high and dark red for the low with a thickness of 2. Same with the open is a thickness of 2 so that I could really clearly make them out. I used the dark colors on the white background. You can use, lighter colors on a black background, whatever works for you. These are really cool because, as you see here, this is showing me the previous day's range, okay? So this was the previous day's high. See, it opened here, and that's the high right there, the previous day's high. And then this is the previous day's low. So just remember, this is for the previous day. So for example, here on Roku traded almost entirely inside of its previous day range. It broke out for like a second or tick or two, and then it came right back down and then just consolidated around, making inside bar after inside bar around the open. So this is going to help you figure out whether something is trending up or trending down or going sideways like this did here. So those are the two new things that I've been using on these charts. Now let's talk about these overlays. These are overlays that I adapted with some code from Paul Townsend on Use ThinkScript, and I made them so that they look like this on this chart, to help you see scenarios across all of the intraday timeframes, and together with another study that I wrote, which is these magenta and cyan lines, help you determine where there is timeframe continuity and where that begins. So like I talked about briefly in my other video, timeframe continuity just means that, like these labels indicate here, everything is above the open. So in this case, prices here were closed because it's Saturday, but price closed above the open on the 3, the 5, the 15, the 30, 60, et cetera, et cetera, et cetera. And in order to be above the open or close above the open, it has to go above the open, right? And if it's going up, then the highest open is always the beginning or of time frame continuity to the upside, and the lowest open is always the beginning of time frame continuity to the downside. I'll explain a little bit more about that in a minute, but let's remove that study so you can just see the overlays by themselves without that study. And that was, where is it? Strat opens 5. Now this is a variation of the one that is in my use think script. It's just the basic backbone for that study. So it takes into account the 5-minute, the 15-minute, the 30-minute, and the 1-hour aggregations, and then it defines the open, the current open, and plots the top. If it's the highest open, it plots whatever that time frame's open is as the top, and it does the opposite for the bottom. So let's remove that and just look at the overlays. Now, each one of these overlays, this is the label for the overlays right here. There's a 5-minute, 15-minute, 30-minute, and 1 hour. Now, this is on a 1-minute chart. This is all already preloaded and pre-configured, and it includes that time frame continuity study right over here. Okay, so if you want that chart, you just load this, and it already has that time frame continuity study. It's exactly the same thing that you see here. So each one of these overlays, let me zoom in a little bit more, has a line that goes through it, and sometimes the line goes across several overlays like it did here. This is the open for that time period, okay? The line is red if it closes or is below that open. So in this case, this area right here that is shaded, and as you can see, it stays shaded as I hover over each one of those overlays right there. That's the 5-minute. You can use this overlay in 2 different ways. First of all, you can use it, well, 3. You can use it to see what the range is for that time period. You can use it to see what the scenarios are, the strat scenarios are for that time period. And you can use it to determine continuity because, as I've been talking about, each one of them has its own open, right? So in this case, we see that it opened up as the 5er opened up with continuity to the downside. Price went below its open, okay? And then the next 5er continued down, and it made a 2 down scenario. And then the next 5er made a 2 down scenario, but came back up, went above its open, tested it, came back up, and closed above its open, which is why that line is green. The next 5er after that is a 2 up scenario. So here we have a 2 down, 2 up scenario, and you can see that it started with continuity changing back to the upside. Now here there was some corrective activity, came back down, opened and went above its open again, went above the open for this 15er. Okay, this is the next time frame up. This is the 15-minute, and as you can see, this is still an inside 15-minute, right? But we're reversing because there was a 2 down, 2 up on the 5er that continued as another 2 up on the 5er. Okay, it tested the open, as you can see with this black line here, made an inside 5er that closed green, and went above the open on the flip here, which is at 10:30, went above the open, okay? Triggered an actionable signal right there because this is a 2-1-2 actionable signal. It's a 2-1-2 scenario right there on the 15 minutes right there, above the daily open, okay? And then it went above. Now I have my chart set to aggregate at the top of the hour, which is why it shows this line all the way across. This is the hourly. If I had it set to aggregate at the bottom of the hour, this would be the new open, and then it continues above the new open and continues. And then there's some conflict here as this 2 up goes 2 down on the 5er, 1, and another actionable signal back down below the open. And again, we're looking at Roku, so it did this all day, just going up and down around the open inside of the previous day's range. But this is hopefully going to help you guys understand how these overlays work. As I zoom out, you see the picture a little better. And you can see, for example, it opened here, tested down, tested up, tested the previous day's high, came back, made an inside. This was a 3 on the 15er. Then it made an inside 15er. Then it broke the 15er to the downside there. Then another inside 15er, because it's just been consolidating and getting tighter and tighter and tighter all day. Okay. Now, you're going to see this whenever there's consolidation. You're going to just see that there's no really decent trade. And if you want a decent trade, you're going to have to zoom into like the 5ers and maybe the 3 or the 1 minute on those types of days. And you see it did that with VWAP as well. That's this purple line that goes up and down like this. So this is just sideways action, but you get a good idea of how these scenarios play out. See, on the 15ers, again, we had this 3, 1, 2 down, 1, 2 up, 2 up, 2 down, 1, 2 up. So these are actionable, but what about the range? If you just want to take actionable signals all on their own, and you don't think about range, and you don't think about something like whether a stock is consolidating or trending, then you're probably still going to get chopped up, even though they're actionable, right? Even though this is a 2 up, 2 down. Well, this one had some pretty good range, so you might have caught a good scalp here at the beginning of the day, but you couldn't hold it for very long because you would have ended up getting chopped up, right? That's neither here nor there, but this is just an example of that type of action. On this day, for example, we opened above the daily open here, tanked all the way down to here, and then continued above it for a bit and still consolidated because we made this entire opening range right here, this huge mother bar, and never broke out of it to the downside or to the upside. Okay. Let's go back some and look at something that was trending right here. For 2 whole days, opened above the previous day's open and continued above it, consolidating at the end of the day above, and it stayed above VWAP most of that time. The next day did the same thing. See, there's the previous day's high, opened above it, continued up above it. All right. So this is why you have to analyze these time frames. Not a lot of range here with these little, bars comparatively, but you do have a nice trend going, which kind of came to a stop right around here when things consolidated there and then continued to consolidate on Roku. Now let's zoom out some and see why. Because we had already done this for 1, 2, 3, 4, 5, 6 days in a row. So those 2 days right there are at exhaustion risk. And notice this coincides with what Sarah talks about in her videos, with the magnitudes being the pivot highs. So in this case, we had this monthly, okay, because this is now the intraday, this is now the full time frame chart. Again, same thing. You can find it over here. There's the preloaded intraday, and there's also a preloaded full chart. And that's what we're looking at right here. In this case, I have mine set to a different aggregation for the chart. I've got mine set to a 7-hour, just so that I can see the monthly overlays a lot clearer. But you can, it's actually designed to be set on the 1 hour, and you can see how when you set it to the 1 hour. Let's add a little bit of time to this chart. 90 days. There we go. Same kind of deal, but now each candle is 1 hour. Okay. And so again, just like the intraday time frames, this is the 1 month, and it shows us that this was a mother bar with an inside month that went down. It broke to the downside, going actionable to the downside there. Then it did an inside week, because this next smaller overlays are the weekly overlays that went actionable to the upside. And we suspect at that point that as we cover this previous range, this being the highest open, we suspect that it could go rev strat, which is exactly what it did, like Sarah talks about in her video. After some corrective activity, we had a 2 down on the week, an inside week, followed by actionable to the upside on the weekly that also triggered the rev strat on the month. Again, if you entered here, you got caught for a little bit, for a couple of days before you continued up. So if you want to use something like this, a long time frame, because you suspect a monthly rev strat, maybe don't go all in, when it triggers at first. Maybe open a starter, right? Um, and then add to that position as there continues to be a continuity to the upside. And when does that happen? As it continues to go above the highest open. So when it went above the highest open, which was this week's open there, that's where you could add. And you could add every day on the open as it continued to go above it. And for example, here, if you wanted to protect profit, we're so close. Actually, we did cover our magnitude. You could take the whole thing off. You could take off half. This is how, you have to manage your position using your own risk profile, your own risk tolerance. Um, but this is kind of the concept behind it, is you don't want to let it reverse against you. Now, it didn't do that. It made an inside day right there. You can barely see it, but it made an inside day, and then it continues up. But this would be a good place to start protecting some profits. Now, if there's continuity again, we have a little bit of month left over here. Okay, it's going to bleed into this next week, is going to bleed into next month, and we're going to have a decoupling and everything. That's going to give us a lot more information about whether or not we're going to continue, or if we're going to see a retracement. Which takes me to another issue. There's two types of trades. There's the type of trade like this that we just discussed, where you're adding into a trend, and in this case, it was a very strong trend. Okay, and you don't have to tick the bottom and tick the top, but you can add on each one of these, and you can get the meat of the move, right? It's like I said on Twitter one time, I don't want the whole loaf of bread. I just want two slices with butter and marmalade. So you can catch a real decent trade here, for example. As soon as it triggered that rev strat, okay, you could have trailed the bottom of the previous week, which never would have stopped you out. Granted, that was let's see, from 356 to 325. So personally, I would have opened one share, right? And then added into continuity with confidence as this rev strat continues to be in force, looking for this magnitude here. Okay. And then maybe protecting profit, or if we're zooming out, you know, um, for example, the way I had it set at the beginning, we can get a look at the big picture and see, do we want to stay in this, or, at what point do we want to get out? In this case, we have a few more targets. Well, we have one more target right here on the monthly. So I don't know, make your decisions, but there's continuation, right? And that takes me to the second type of trade, which is a reversal back through previous range into continuity, which is exactly what happened. We reversed, we triangled out, right? And then we reversed back through that previous range, and now we have full time frame continuity going up, and we have targets to the upside. But keep in mind that once we get up here, for example, there's exhaustion risk, and everybody who's long wants to be long, etc. Um, let's look at another thing I want to talk about, which is some ways that you can scan for these setups. In this example, and I'm not going to talk about the scans that are on this page, because they're already there. They're at the bottom here. Sorry for the quick scrolling. They're already there. Watch this video first. This is not my video, but it's a great video on how to define the scenarios. And then I put these different scans up here on this, and a video tutorial there. So I'm not going to talk about that stuff, but they're already in here. And for example, in this case, I'm scanning, did a filter for stock where I want to see a minimum of 100 million to 500 million shares. So like a large cap, right? A volume of at least 5 million, and then some scenarios. I want to see a 2 up this month and a 2 up last week. And so there's a couple of big ones that showed up. Roku's the one that we've been talking about, and Netflix. So let's look at Roku again. Here we have, again, a triangle out. And as soon as that happens, then we have a low to a lower low right there. And we already had a high to a higher high, but we could do that as this month's high to that month's high. So now we have this broadening formation, okay? If you're looking at formation analysis, we do still have some room to the upside. Okay. Um, but going back to the previous comment about the types of trades, here's a reversal where we went to the bottom of the try, came up, made an inside month, retested the bottom of the try, and then reversed off the bottom of the try with an inside week that went actionable to the upside and wouldn't have got stopped out if you were trailing the weeklies, or maybe it would have, but you could have got back in the way we mentioned as soon as this went rev strat here. So be flexible, but also keep in mind what kind of trade are you trying to take. To me, this is a little bit riskier. The risk here is that there will be continuation to the downside, that it would break down this support, which is diagonal, and then continue to the downside. As I talked about in the previous video, you have to keep in mind the 4 C's. This is conflict, right? If we were to draw another overlay here, like let's say the quarterly, you would see that this is now conflict because the highest open is here. So is this conflict going to result in a change in control on the quarterly, or is it going to resolve by confirming continuity to the upside? Here, we confirmed continuity to the upside with several signals, depending on what time frame you're looking at, depending on what time frame you're trading on. We had an inside break on the weekly. There's been inside breaks and threes and all kinds of other signals, rev strats and whatnot on the daily. The monthly did the rev strat. So keep in mind what kind of trade. So in this case, that was the risk. It didn't happen, but it confirmed continuity to the upside. But then that takes us to the other type of trade, which is the momentum, so-called momentum trading, trend following, where the risk is exhaustion and a reversal conflict that could take you out that way. So now we've talked about the scans. I want to talk about another product that I use frequently, which is every time I have, like, for example, we did the Roku scan, okay, or the Netflix. Every time I have a ticker that I want to analyze, I don't just look at Thinkorswim. I really like to look at Tradingview because Tradingview doesn't default between. I mean, Tradingview defaults to linear. To a linear scale, and it doesn't toggle you between a logarithmic scale and a linear scale when you switch between time frames. So I like it because you can actually see very clearly um, the actual range. In this case, each one of these is an hour, and then these overlays here, these are not mine, by the way. I think these are already in Tradingview, but I use these. It's a multi-time period charts. I have mine set to the weekly, monthly, and daily, and I use trading range, not true range. And in this case, we have the candles as hours, and then there's the dailies, right? I always like to analyze the chart using Tradingview so that I get a real clear picture of what kind of range are we talking about here. In this case, I'm looking at 10 here. You see this inside month, and there's huge range after that trigger. Look at this range. Because it didn't scale the chart logarithmically, it kept that linear scale. So that's why I like using Tradingview for especially for drawing formations and whatnot. It just keeps that scale, or maybe it's logarithmic. I don't know. Maybe I got it backwards. Anyways, it just keeps that scale, and it really shows you the actual range that you're dealing with. Whereas with Thinkorswim, when you size the chart, when you switch between time frames, that it messes up the drawings, and it messes up the scale. Now, this is all not really my process. I mean, there's two processes that I have going on. One of them is I want to gather data on different types of setups and determine what are the best types of setups to take in any situation to be able to write a playbook of sorts. And another, which is the one that I'm more actively engaging in now, is I just have this universe of stocks. These are all large cap stocks. I've got a setup that I have high confidence in, that I got from Jay Trader, and thank you, Jay Trader, if you happen to watch this video. I'm not going to talk about that setup because he asked me not to, and that's his proprietary setup. But I'm going to be using it on these. I'll let you know how that goes. I just started out doing that. This is what I'm focusing on because I don't want to be scanning for different stocks and then just be scatterbrained all over the place. Oh, now I'm looking at Roku. Oh, now I'm looking at Netflix. It always feels like I'm chasing my tail trying to find trades that way. And because of my personal situation, I can't get in and out of trades as quickly as I'd like. So I want to focus on these particular charts and these particular formation analyses that I've already done, that I'm continuously doing, using the setups that JTrader has taught me and that I continue to test myself. But if you wanted to do the other way and continue to scan and try to find, well, is it a rev strat? What's the best setup that works? Most of the time, is it a rev strat or is it two down, two up? You know, Another tool that I went ahead and got because I find it incredibly fascinating what they've been doing is this Trade Unafraid platform. Personally, I'm not using it to trade because I don't want to get a Tradier account. I already have plenty of brokerage accounts, and I don't want to keep spreading myself thin between them. But I really like the fact that you can set this up. I mean, it's foolproof. Once you set up a trade plan, then you can set it up to trade automatically on a sim account. And that sim account it should, if you wanted to get a Tradier account, it should trade exactly the same way, whether it's live or a sim account. So, for example, we've been talking about the RevStrat a lot. Let's say that you've noticed that every time the price continues above the previous day's open, um, you can always get in on a RevStrat like on the Fiverr. So, what you do here is, let me close that out. You click here on the plus signal, you type whatever stock, let's say Tesla. We were looking at Tesla. You can trade options or stock, and then you could do either long or short or both. In my particular case, I just like to trade long. So click on long, okay? And then you can choose candle pattern, which is what we use with the strat, and define that setup. So let's say we were talking about the 5 minute rev strat. So you start with an inside bar because a rev strat always starts with an inside bar, and then an outside bar, and then a two up, right? Well, actually, we just leave the two up, you know, out of it. Or it could be a inside, two down, two up, right? And for example, we've been talking about time frame continuity. Let's say that you only want to get in that trade with time frame continuity, and you go over here to set up filters and click time frame continuity. And the way that they did it is just if it's green on the time frame. So, for example, we only want to get in the trade if it's green on the yearly, the quarterly, the monthly. Oops, let me remove that. The yearly. Oh, okay. Sorry. We have to start that over. If it's green on the yearly, quarterly. Oops, quarterly. Wow, why isn't it not going to quarterly? Daily, monthly. I didn't do quarterly. Okay, well, let's say there it is. Quarterly, monthly. You get the idea. Weekly, daily, etc. And then it's only going to take the trade if there's continuity, where it's green on the monthly, green like it wouldn't take the trade at all there. Green on the weekly, green on the daily. And if you wanted to do continuity on any one of the intraday timeframes, you would select that as well. You could do several types of entries, and then define your quantities, etc. And then exit tactics. Again, also really interesting because, for example, on this day, if we had got in at the open because there was continuity to the upside, right? Where would we have been stopped out on the daily? I talked about this on the last video. I mean, not the daily, on the Fivers. We would have been stopped out there. That would have been a great trade, by the way, at the open. But let's say that we wanted to continue to hold because we've got a trend going, we've got continuity. Let's say that we wanted to get stopped out on the 15ers. We would have got stopped out there. So that would have given us a little bit more exposure, but also a little bit more profit since we have a trend and we have some confidence that it will continue. And then if we had wanted to get stopped out, let's say trail the bottom of the 30s, where would that have happened? There. So that would have given us a little bit less profit in this case. And it would have been the same case with the hourly. But because this thing continues to trade the plan over and over again, every time it finds that setup, then it'll continue to get in. And if you wanted to give yourself a little less exposure here, for example, but a little more than the fivers, you could trail the 15ers. It would have taken you out there and maybe put you back in the next time it found one, a rev strat, or let's say you wanted to do an inside break. You could do the 1-2 up, whatever setup you're trying to test and gather data on. It would have got you back in the trade and continued to trail that time frame. So here it would have taken you out on the 15ers, but here it would have taken you out there, and so on and so forth. And that's how you would protect profit if you wanted to do it automatically. So I'm really impressed with the work that they're doing. Um, and I plan to continue to use this with the sim account so that I can gather some data on different types of setups and analyze that data and um, determine what times of day the setups work best on, to determine what what contexts those setups work best on. This is all part of a much larger process where you have to find your niche, where you have to find that statistical edge. So I'm coming at it from various different angles, but within the paradigm of the strat and within the paradigm of price action, as I've been discussing in my previous videos. And I think this video has gone on long enough. I don't want to make it too long like the other ones. But if you have any questions, please DM me on Twitter, because I very rarely see the comments on YouTube. But I do try to get to my DMs as quickly as I can with Twitter. So I hope you've enjoyed this, and let me know. Give me some suggestions for another video if you want. Thank you.